With 2015 well underway, we caught up with Dr. Robert Hartwig, president of the Insurance Information Institute, to ask him about the impact of the economy on the insurance industry. He also shed light on cyber risk within the industry and as an opportunity for growth. Here are the highlights.
Well, in the United States, the economy is picking up steam. The employment numbers are looking pretty good. That's helping to grow workers' compensation exposures. We've seen a little softness in areas like construction in late 2014, early 2015, but I think that'll turn the corner a bit. So all in all, I think that the economy is providing a modest tailwind for the property casualty insurance industry as we move through 2015. Of course, on the flip side, we have to look at the financial markets. While stock markets have done relatively well, again, the industry is overwhelmingly invested in fixed income securities. So the persistently low interest rates remain a vexing problem for insurers, whether they're property, casualty, life, or reinsurers all around the globe. The situation is even more pronounced in Europe, where in effect some interest rates are actually negative. So this is a strong headwind for the industry, so that does create in general more pricing pressure for the industry over the longer run, because as insurers earn less off their investment portfolio, they have to earn more through pricing. So we've got these forces, economic tailwinds, but we've got headwinds still coming off of the low interest rate environment. Anthem is just one of many, many corporations in America and around the world that have suffered large-scale cyber attacks. No industry is immune, and we're going to see innumerable large-scale cyber attacks in the years ahead. But insurers are taking the threat very seriously, and obviously this involves doing everything they can on the front end to protect the confidential data that they do have. Now, you could think particularly about Anthem, where the sort of data that was stolen was not confidential patient information, but you can imagine a scenario where, in fact, that does happen. You could imagine a confidential test information being stolen and being used for all kinds of purposes that would be quite unfortunate. Corporations in general in America are investing tens of billions of dollars on cybersecurity. And at the same time, so while that's one part of the solution, another part of the solution is the ramping up of cyber insurance products on the part of dozens of insurers now. We've gone from perhaps a dozen or 15 insurers offering such products to scores of them offering products in early 2015, and I expect that number to continue. And while the vulnerability is often seen as being on the part of larger corporations, these are the ones, the publicly traded companies, that often make the news. The reality is that smaller and mid-sized corporations that have the same sort of information but on a smaller scale are equally as vulnerable, in fact, perhaps more vulnerable, because their cyber defenses are not there. So insurers are evaluating these risks. They're bringing products to market. They are helping their clients bolster their cybersecurity. And then on the back end, they're helping figure out what went wrong and to help prevent it happening again. But it's very, very early days on this. And we are in a situation right now that I like to analogize as something like a century ago in the very early days of aviation. There's a lot more that we don't know than we do know, and we do know that the risk is going to continue to evolve, and it's going to continue to evolve rapidly. You know, when we look out, beyond cyber, we have to think about where is the economy growing today, and it's growing in the area of technology, and even in areas where and so we can think about such things as how do you insure intellectual property? How do you ensure these various intangibles where a lot of value is created in the world today, but you can't really lay your hands on it? So it's more about the value in these bits and these bytes, and the people who create the code that creates these bits and these bytes. It's a difficult situation, but even if you move beyond that, if you look at traditional industries such as manufacturing, for example, and you look at the types of skills that are needed to work in these enterprises today, if you look at the technology that's in automobiles, or whether it's in aircraft, or even increasingly in homes, we're talking about all sorts of systems that now must be insured. There are all kinds of risks associated with creating more with vehicles that are increasingly automated, for example. Well, there's a lot that's been said about Google and its self-driving cars. It's quite a ways off from reality at this point. But at the same time, there are all sorts of technologies that are going to have to be developed, and that we're going to be talking about all sorts of product liability sort of issues in the future that don't really exist to the same extent today. Other areas that I'm very high on, rapidly growing in the U.S. and globally, are the healthcare sectors. Again, a lot of technology involved there. And also the energy sector. Despite the swoon that we've seen in energy prices recently, the longer-term trend for energy production around the world and investments in energy infrastructure is up. It's not down. This is demographically driven. It's an energy-hungry world. And I'm also high on areas like natural resources. I'm high on areas like international trade, so that's very good for the marine sector. In areas like aviation as well, and particularly when you go outside of the United States. And you can see the struggles there. Where have most of the major aviation disasters been? It's been with Asian airlines as of late. And so you're talking about rapidly growing parts of the world, both in terms of population and in terms of the economics, a business class and a middle class that's looking to travel, both for business and for personal reasons, and you're looking at an airline industry that's trying to keep up with that. And so we have to look at the implications of rapidly growing economies and what implications that potentially has on risk management. Is risk management left on the back burner in some parts of the world as economic growth is pursued as goal number one?
In part 2 of our discussion with Bob Hartwig, he gives his outlook for the commercial P&C sector, the personal lines market, agents and brokers, and reinsurance. So keep it here for more world risk and insurance news on RIN TV.